please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the trade setup this morning is quite good. If we take a look at what's happening to global markets, crude oil is, of course, a bit of a worry. It's back above 78. SGX Nifty indicating 35 points in the green. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwani, what's the trade on the Nifty and also on the Bank Nifty, where we'll have the HDFC Bank factor as well?
Well, good morning. I don't understand the HDFC Bank factor too well. But today is not a good trade setup. Yesterday was a good trade setup where it was a no-brainer to buy in the morning and by evening you could have made money. Today I'm not so sure that I'll be trading the index because there is a good chance that you open 35, 40 points higher and then there is no follow-through because the short covering, a lot of it took place yesterday. So I would go mainly with individual stocks. In the market, there are days when you get a lot of money and it's in the right corner, and there are days when there's the opportunity is limited because the setup is not proper. The setup is proper once there is some sort of panic in one direction, and then you take the other side.
Okay. Well, Ashwani, good morning. Just a word more on Nifty Bank. Is it slightly better placed than Nifty? Today, of course, it will be rocked by weekly expiry as well.
See, even there, yesterday or probably day before I mentioned 26, 200, 250. We got there yesterday and we got a 400-point bounce. Now here, if you are opening 100 points higher, you are very close to the upper end of the boundary. So it becomes fairly risky to place a trade because your stops are fairly wide. I don't think even on a compulsive basis trading the indices is a good strategy today.
Okay. Sudarshan Sukhani and Mitesh Thakkar also join in. Gentlemen, morning to both of you. Sudarshan, first I want to ask you, of course, your view on the index, but also on how to approach these corporate-facing banks, like ICICI Bank, because of the slew of positive news that has come out on the NCLT front. Would you continue to buy these names?
Yeah, good morning. Well, first, the news-based trades. I don't buy news because the news sometimes gets discounted, it becomes irrelevant. My own sense is that markets are ripe for a sideways significant consolidation. So I would not be in a hurry, not for HDFC Bank and not for ICICI Bank. The market view is that we are now in some kind of a trading range with support at 10,500 and resistance at 10,700. This is not a very clear range, but at least the contours are visible. Inside a trading range, trading becomes irrelevant because markets will do this. One day they gap up, one day they gap down, and they go all over the place but remain inside the range. So for today, and with expiry, options expiry and by-election results both coming together, I think the trade is to be patient. If there's a significant dip in the Nifty, let's say it comes to 10,600 or close by, then a buying opportunity comes about intraday. Apart from that, the range itself is not tradable.
Okay. Mitesh, good morning. Your thoughts on the indices?
To be very honest, I think I don't have a very clear understanding of the indices right now. In the short term, I think the picture looks quite muddled and, I'm not able to make out which directional bias to keep. So the way I'll approach the index is to keep an eye on two levels, 10,700 on the upside, 10,550 on the downside. I think a break on either side could give you a directional bias. So maybe we can assume a range of 150 points, but again, I'm not really sure. So I think we've been trading with a more of stock-specific bias since yesterday afternoon.
Okay. All right. With that, let's get to the specific stocks. Ashwani, what are you trading?
Well, again, there's a bias towards financials because Bajaj Finance that came back strongly, that's a buy with a stop of 2100, target of 2165. Kotak is a buy with a stop of 1290, target of 1340. Bata is a buy with a stop of 785, target of 810. Ultratech Cement is a buy with a stop of 3650, target of 3800. I know that this is in a downtrend. It's gone down for 7, 8, 10 sessions. Now it's quite likely, like India Bulls housing, it could have a sharp snapback. So it's that sort of trade. And HUL is a buy with a stop of 1570, target of 1620. And I'm watching Jubilant Food like a hawk because that's fallen on 2 days fairly sharply. It's a strong stock. At some point, something will happen and it'll start running on the other side. So that other side is that sort of a trade that I'm looking for today.
Yes, so yesterday also the blocks happened and the market thought it was perhaps the promoter stake sale, but it was an transfer between two schemes of mutual fund. So that, of course, will be interesting. Sudarshan, good morning. What are your stocks?
Good morning. Well, the stocks are in FMCG and mid-cap IT. That's the buying. These are two outperforming sectors and they continue to do well. So Asian Paints is a buying opportunity on the verge of a breakout to new highs. Hind Unilever is a buy. Every time it corrects, it consolidates, it goes out and makes new highs again. That is possible both from the FMCG pack. That entire pack looks very attractive for buying, and especially on a choppy day like this, like today. Mindtree is a buy. That stock has a remarkable run and it's not stopping. So that pause is an opportunity to go long in that stock. Two short selling ideas also. I think a choppy market will give them. Both are intraday. Short selling should be done only intraday. Bajaj Auto, where the stock is suggesting a correction of some kind is imminent and actually has already started. And Engineers India, if you see the charts of Engineers India, the stock has been falling for almost 3 months. Every day it makes new lows, breaks support levels. So short selling and FMCG and IT.
All right, thanks for that. Mitesh, what about you? You like Bajaj Finance. It's been one of the biggest gainers this month. But apart from that, what else are you looking at?
I think both the Bajaj twins have done extremely well and we have had buys at various points in time. Bajaj Finance, I think yesterday gave some signals on the intraday chart. So keep a tight stop at 20.99. Look for targets of 21.60 here. I also have a buy on IOC with the indicator setup turning quite positive. So buy with a stop at 166. Look for targets of 180. The solitary sell call is on PVR where the negative expansion is happening on a couple of indicators. So keep a stop at 1342. Look for targets of 1280 on the downside. Two more buy calls. Reliance Capital, that's a buy with a stop at 413 for targets of 450. And Lupin, I think after a long time, is now showing signs of an early reversal. So that's a buy with a stop at 766, and I would look for a first target of 815.
Okay, gentlemen, thank you very much for all those trading strategies. We are coming back to you, of course, a little later in the morning. For the moment, there are two issues that we want to discuss, and we have a market veteran joining us. One, the HDFC Bank surge after SEBI announced that it will discontinue this FII trading window from the 1st of July. And the other thing we want to discuss is MSCI placing India and Brazil on notice for limiting investor access. How to deal with both this from a market point of view? Nilesh Shah, Managing Director, Kotak Mahindra AMC, joins us on the phone line. Good morning, Nilesh. First of all, this limiting of the FII trading window, I mean, how does, as an investor, how should we bother about it? For instance, in HDFC itself, HDFC Bank's case itself, what's the impact on the on trades?
Lata, unfortunately, I haven't studied that in detail. It happened overnight.
Okay.
But my guess, FII will be a better person to answer this than the local guys.
Okay. What about the MSCI issue then? Even that is an FII issue, but this warning and an eventual capping of India in the MSCI index, should we worry about this as a big negative?
Certainly, it is something which we need to take it seriously. MSCI is one of the indices, but it is largely prevalent among foreign institutional investors. A lot of FII money gets benchmarked to MSCI indices, and if India's weightage comes down, then it could have repercussions on what kind of flows we can get from FIIs. Clearly, we need to take two-track approach, one with MSCI, and second, people who influence FII, people who influence MSCI, wise all the FIIs who are investors in India. With respect to MSCI, we need to point out that there is no other country in the world, including in their own universe, where the largest bank, the largest insurance company, largest FMCG company, largest auto company is owned majority by foreigners. If this is not giving access to FII, then what is access to FII? Second, we also need to bring to their attention that in 2013 crisis, China restricted foreigners from selling if they were owning more than 5% stake in the company. There were restrictions on repatriations. Even today, a foreign mutual fund cannot set up a shop in China. They'll have to wait till 2022. Now, if this is not considered restriction, then how can you blame India for restricting foreign capital where mutual funds are operating since probably 1990s? Or we have never restricted people from taking their money out. And there are instances of companies like Daiichi selling $2-3 billion of stake in a single day and taking their money out. So we need to engage with MSCIs to bring out what we have done and ensure that they treat us fairly.
Oh, absolutely.
The second,
Nilesh, just a follow-up to that. So India's weightage now is about 8.5% in MSCI. And if there is a cap for that weightage, what do you think it would do to the flows in the near term? And what's your own sense? Do you think this is just posturing or would there be a real risk to flows?
we need to take it seriously. Even it's posturing, we need to ensure that we take a reasonable protection against it. My guess is that many of the active fund managers will remain overweight India for the growth potential we offer. But there are lots of ETFs which have no option but to follow MSCI indices. So we will end up immediately, losing the flows from the ETFs. In fact, they may have to redeem if MSCI reduces our weightage. And there is no fundamental reason why MSCI should reduce weightage. And hence, we should make our points very clear to them. Hopefully, they will listen to us. And the second track which we have to do is to engage with foreign institutional investors, because in this consultation paper, the decision maker is FII. So people who are overweight India, people who want to invest in India, people who have a positive view on India, we should reach out to them so that they can tell MSCI that, look, it doesn't make sense to exclude HDFC Bank from MSCI indices when almost 74% of their ownership is with foreigners, under the garb that FIIs cannot buy HDFC Bank. They can, of course, buy from another FII. Show me one American bank, show me one European bank, show me one Chinese bank, show me one Australian bank, where 74% is owned by foreigners.
So, Nilesh, when you say we should reach out, what do you mean? I mean, are you trying to say that Indian exchanges should sort of reach out to MSCI to avert the situation? I mean, what should be the next step now?
The we includes Indians. Obviously, it should be led by SEBI, then exchanges, and then all of us in our individual capacity. Sonia, you will be knowing so many foreign fund managers. Just reach out to them and tell them that this is how you need to present to MSCI. Why should always government do things? As Indians, don't we have a duty?
Nilesh, our problem is a little more short term. As this scrap goes on between, MSCI and Indian exchanges, in the meanwhile, will this be an overhang? That is the limited point. We don't know how this fight will end. It's possible it will end in favor of India and MSCI sees reason. It's possible it happens the other way around. Is this an overhang for now?
No, it is not an overhang for now, because they have issued a consultation paper. People have to give feedback by November 18, and they will give their decision by December 18.
Okay.
No ETF is going to do a trade in anticipation of a change. They will always do the trade post-change. Okay. And if we can build a momentum among FII, which goes and shows to MSCI their irrationality of excluding HDFC Bank from the indices, which is India's largest private bank, it just doesn't make any sense.
Okay.
So we need to go out to all the people who can influence MSCI and at the same time engage with MSCI and ensure that they also realize the irrationality.
Okay. All right. Nilesh, just before we let you go, the other issue that we were discussing this morning is the slew of NCLT resolutions that's taking place and the impact that this would have on corporate lending banks. Are you of the opinion that corporate-facing banks could perhaps see an up move because of this?
Temporary, there might be up move like in many of the NCLT companies itself we have seen. But in reality, the losses from the power sector are not yet fully discovered. And the resolution which is happening is in one or two cases, but it doesn't mean that all NPAs are fully provided for. So our expectation is that over next 2-3 quarters, there is still some pain of NPAs left. It will get sorted out over next 2-3 quarters. And in that period, market for corporate-focused bank should make a bottom.
Okay. All right. We will leave it at that, Nilesh. Thank you very much for joining us. Okay, since it's only a consultation paper and we have time till December, the markets should not worry right now. But a build up to making the MSCI series is what Nilesh is recommending.
Okay, we'll take a break, but we will discuss a lot of the stocks and what you should watch out for in our next segment. On the other side of the break, Prakash Diwan will join in with some long-term stock ideas.
We're the new kind of people in town. We're not waiting for the market to wake up. Introducing the new way to invest and grow anytime. The new way to get rich. Angel B. Download now. Mutual funds are subject to market risks. Read all scheme-related documents carefully before investing.
Get your kitchen to the next level of luxury with Architect drawers. Hetic fittings make your furniture work beautifully. German quality you can trust.
Wow, cheese, crust, toppings, सब improve हो गया यार.
तेरा गेम कब improve होगा?
All new Domino's. More cheese, more toppings and soft crust. Starting at just ₹99. Order now.
Welcome back. Well, that's a bunch of technical ideas and strategies that we discussed. Let's now discuss some of the fundamentals that will affect this market. Prakash Diwan, market expert, joins us now. Good morning, Prakash. Good to have you with us. Well, first up, what did you make of the HDFC Bank issue? Today, we should largely ignore it. It was an aggressive 9% rise almost in the ADR, but no impact for domestic investors?
Yeah, I guess so, because this is exclusive FI club kind of a thing that's happening, and they would want to, of course, lap up whatever is available, before the window kind of comes to a shut. But my sense is it also tells you that in this market, the flight to safety will make HDFC Bank get re-rated, given that now we've seen all banks come up with whatever they could, and some of the numbers tell you that HDFC Bank still has a very, very positive, deserving premium that it would kind of continue with. So I don't see there could be any letdown in terms of the kind of appetite that people have for HDFC Bank. And that is what is kind of very clearly, the underlying takeaway that I have from this demand that's there. Just because this window has precipitated it means that it's still there, it's latently there, and it would last for much longer.
Okay. Prakash, hi, good morning. From the list of companies that reported their numbers post-market hours yesterday, the one that I thought looked impressive was Berger Paints, a revenue growth of 17%. Yeah. Margins looked very good, but this stock is already at new highs. Would you still buy it here?
So I'll tell you, Sonia, what Berger Paints did in terms of the numbers, it tells us that this entire segment is going to be extremely promising. It's in spite of whatever slowdown that we kind of perceive or we kind of hear about. And then, the news on the ground is that an Asian Paints is looking at expanding. Berger, with its high quality, high margin business, is also looking at growth, and it has shown that kind of growth. So I think this segment will probably be one of those front runners in terms of a revival that you see in consumption, and which has not been there. FMCG, we've seen some consumption. Paints is a very peculiar cap goods stroke consumption kind of play, and that's where I think I would definitely go ahead and buy some of the paint companies. Asian Paints is one of the best picks right now also. And remember, paints also gives you a lot of downstream benefits and advantages, some names that could crop up. So there's this very small company that does a lot of packaging for Asian Paints, and they've started expanding in conjunction with the Asian Paint expansion called Voltec Pack. I don't know if you've tracked it or discussed this, but These are companies, businesses that you would have to ride if you want the Berger and the Asian Paints growth story to be taken advantage of. Sure.
Okay. Well, among the other results is Apollo Hospitals. Is that a stock that you care for or you have tracked? It's, well, inline numbers, nothing very surprising.
Yeah, I think Apollo has been eclipsed with the kind of limelight for whatever reasons that Fortis has enjoyed all this while. So people have really not read too much into its promise or something. But some of the names there, Healthcare Global and all that, that chain is expanding, that segment is expanding. So you really have, it used to be binary, almost binary earlier, and now you have many more options coming up, Lata. So Apollo probably doesn't get that kind of attractive premiums and all. But my sense is, yeah, you'll have to wait for a while to see whether, they get out of this whole thing in a way that's positive for the sector and the headwinds get positive. So I agree the numbers are in line with expectations, and thankfully there were not very high expectations before the numbers. So that's one of the reasons why the stock might not see such a major reaction or strong reaction. But among the numbers that we saw yesterday, I don't know if you've done this before I started on the show, but there's one company that's a very good representation of capex in the industrial segment, and that's the company called WPIL. And phenomenal numbers. It's a small pump business, but very specialty, high-powered pumps, high-diameter pumps. And that's one company that's done phenomenally in terms of EBITDA growth, in terms of top-line growth. So that tells me that there is, and valuations also are undemanding in terms of, you look at some of these companies that start revivals and then you miss out on that. And for example, this is available at a 12.5 TTM PE price earning multiple, which is really not something to, that you feel worried about. So these are things that people should be looking at this point in time, and there's been a little bit of cool off in the mid caps as well.
Oh, absolutely. In fact, we covered this stock on our top 10 segment as well. Very good numbers coming in. So maybe that stock could be in the green today. But Prakash, just stay on for a bit. We're going to discuss some more earnings. It was a weak showing by Shakti Sugars. In fact, the company has reported an operational loss this time. It's only the soya business which worked out this quarter. Sugar, industrial alcohol and the power segment were all disappointing. M. Manikam, the Executive Vice Chairman of Shakti Sugars, joins on the phone line. Mr. Manikam, good morning. We have been discussing this at length as to how this year would be very tough for the industry, but FY18 is now behind us. Give us a sense of how FY19 could shape up in terms of pricing. How are things currently?
See, actually the problem for us was in FY19. The last year, FY18. FY17 we crushed about 19 lakh tons of cane. And in FY18 we crushed 5 lakhs. We hardly crushed about 25% of what we crushed in 17. And normally we should be crushing about 30 lakhs. So if you really look at, we've operated at about 15% capacity utilization, purely due to the drought. And the break-even for a sugar industry is normally around 60 to 65%, so we are far below break-even. The current year, our planting is better, so I think we will do something closer to 10 lakhs, about double of what we did in FY18. So our numbers should be a little better, but still not in the green, depending upon the sugar prices and other things. But with the monsoon coming in now, we are having a better planting now. So I think FY19, FY20 will be a very good year.
Oh, 1920. So we have one more year of pain in between. Mr. Manikam, good morning. You all are also, you all have announced to the exchange that you will sell your stake in an associate company, Shakti Auto Components. What money will that bring and how much? I assume you're going to use it to lower debt?
Yeah, that's right. We are actually, see, the Shakti Auto is held about 76% by group companies, about 22% by Shakti Sugars. So we are proposing to sell out this on a rationalization of holding. So this will bring about 200 crore plus into the kitty. So that should go down to cut debt.
Okay. Well, just one doubt. When you said 1920, did you mean sugar year or did you mean financial year?
Financial year. Financial year.
Okay. You also said subject to sugar prices and where they're going to be, the year may look better. But as of now, what is the situation as far as prices are concerned and what are you expecting over the next 6 months?
Sugar prices are still soft. I mean, we are looking at about 28 to 30 kind of range. But our break-even is around 32 to 34. We think that, we'll have to see how the world market pans out, how the production in Brazil is and also how the Indian production for the next year is, given the arrears and all that. So it's very dynamic. Even in the current year, we're expecting about 28 million. We've done about 31 million. So even if we go down to something like 27, 28 million next year, it might be helpful, but it's too early to say anything about it right now.
Yeah, final word on policy. You know, we hear about cess, we hear about, you know, some kind of support for the sugar industry. Do you think in an election year, any benefit will come to the industry or more likely will go to farmers?
It makes no difference. If it goes to the farmers as well, it will reduce the burden on the industry. So we are quite, you know, you can't really separate the industry and the farmers in this sector, because whatever the government wants to do for the farmers will also help us, because to that extent our load will come down.
Expecting something.
So, absolutely.
So this expectation on the minimum selling price for sugar, is that what you're expecting to hear, and what could be the range you think?
They're saying about a minimum selling price. I don't know how it's going to be executed. That's going to be, we have to see the modalities. That's going to be difficult to done.
No, it has to be some price support mechanism. What are you expecting from the government?
Actually, as I've been saying, they should have a rational sugarcane pricing policy. They should implement the Rangarajan formula. Today, the FRP is even lower than the Rangarajan formula. I mean, higher than the Rangarajan formula.
Okay, Mr. Manikam, thank you for stopping by and giving us your quick thoughts. All the best for the next year. That's Sakti Sugar saying that FY19 will also be a washout year. Sugar prices are quite soft. Right now, they expect the sugar to just hover in the range of 28 to 30 rupees. But let's also get you some F&O cues. Manoj Muralidharan of Religare Securities joins in to talk about what to watch out for today. Manoj, hi, good morning. What are your top stocks in the F&O space that you would trade?
Good morning, Sonia. Sonia, I guess, you know, we're looking into the rollovers and precisely the two major indices, your Nifty and your Bank Nifty. If you see the rollover wise, Bank Nifty is more or less in line to what it did in a 3 months average, but the Nifty is shying away from almost a good 8 to 9%. Now, we believe that this deficit in the rollovers or the open interest into the new contract of June generally happens because the roll cost is not conducive enough for the long rolls to happen. So, first of all, the view on the indices, we believe that there is possibility of a VWAP which might come in then, but when we are expecting the first half of the market to be positive, there might be some profit booking through the bank in the second half. So, the strategy here is you simply buy the Nifty futures close to 10,600 odd with a stop loss of 560, and we are expecting a target somewhere close to 700 to 702 on that. For the Bank Nifty, we would wait for a levels of somewhere close to 26,150 to 180 on the futures, where we buy that with a stop loss of 26,040 I mean, and for a target of 26,480. Stock wise, we like couple of stocks in the FMCG segment. Colgate Palmolive looks good. This is one stock ideally you see good rollover which happens in the last T-3 to expiry. So we're expecting that rollover to happen, and that is happening with a long built up. So you buy Colgate Palmolive for an intraday or specifically stay in for maybe a couple of days. So 1250 is where we recommend buying that with a stop loss of 1220. The target we have is 1320. Titan we recommend buying in the cash segment rather than the derivative side with a stop loss of 890, and we recommend buying it closer to 905 to 910 for a target of 960 on that.
Right, Manoj, thanks a lot for those trading ideas. Prakash, I wanted your thoughts on a couple of stocks. Jubilant Foodworks, which has now corrected a bit over the last couple of days, and of course Avenue Supermarts, which has made a new lifetime high.
Sorry, I caught Avenue Supermarts. Which was the other one?
Jubilant Food.
Oh yes. So yeah. So I think Jubilant Foods is the one stock which is giving you giving traders so much of an opportunity if you get that right, and if you interpret the news flow, keeping fundamentals in mind, you would still want to buy it because everybody was so gung-ho about Jubilant Foods just about 2 weeks back. We had upgrades, we had new targets, and now suddenly here, just the slightest apprehension on promoter selling, and this is what happens. So, but my sense is the stock will continue to do well. The business is on a very strong footing. And the kind of longs that are created in this, and you can ask Muralidharan right now in terms of what's happened finally on the derivative side. But that's an interesting play for a long-term investor to buy in. D-Mart, Avenue Supermarts, I'll tell you, Anuj, my apprehension has always been that when I buy something which is so expensive, even if it's clocking great revenue, continues to deliver. Today, the market is not something that I would want to pay such a huge premium for just one particular business. when there's so much available at great value. And I would rather play it safe in terms of my risk-reward equation than, buy something and be worried whether this will actually play out the way the entire world is expecting. So I tend to stay out of that because I see a lot of bigger opportunities in the smaller companies, below the radar of most institutional investors. So that's where I would look for, not DMart at this point. But Jubilant, yes, you could probably take a punt, given the news flow is kind of, giving you that opportunity of some soft valuations.
Plenty of value available in the market. Prakash, we will hold you to that. We will ask you some more on where you see value. But all those questions to Prakash after a short break. We will also have the pre-opening rates with us.
We've been talking about good news for too long now. Let's talk about some bit of reality check as well. Crude oil prices are again inching up. Manisha is here with a quick roundup of all the commodity market action. Manisha, good morning.
Morning, Anuj. Thank you so much for that. Well, we've seen more than a 2% surge in the overnight market. So back around that 77 mark. We did see prices fall below 75 as well. But it has been a clear $2 of a jump up in last 24 hours. One, of course, the reason is that OPEC says that they are not looking to increase any supplies and that they will stick to their output agreement for the rest of 2018. That, of course, brought the premium back into the prices. Also the point that US shale producers have a break-even anywhere between $45 to $55 per barrel. Anything more than that is gravy for them. And OPEC has worked very hard to keep the prices higher, even with losing the market share. And they definitely wouldn't want to increase supplies and bring those prices down. Having said that, it is important to watch out for the US weekly inventory data today in the evening. That would give you further direction for prices. The good news, though, for is in the metal space, where you have seen the US dollar pause from its 6.5-month highs. You also have seen the Chinese manufacturing data, the fastest pace in last 8 months, and that's taken many of the Shanghai metals on the higher side. So whether it is steel, iron ore, nickel, zinc, lead, all of that is trading in the positive. Actually, keep an eye on for nickel and lead. Both of these metals are closing this current month up by nearly 10 to 12%. The best gains really have come in for both of these.
Okay, Manisha, thanks a lot for that. Well, let's get back to our guests now. Prakash, I wanted your thoughts on how to approach Dilip Biltcon, because, auditors just quitting these companies just days before signing off on the annual accounts has become something that's spooking the markets quite a bit. Of course, Dilip Biltcon came out with a denial yesterday saying that, no, there's no such issue there. But how do you approach companies like this now?
Yeah, so I mean, this is getting to be another round of cleanup on the corporate India, and Dilip Biltcon had the CFO resigning, I guess, if not the auditors, and the explanation that seemingly has come through is also very untenable. But how do you approach these companies is, of course, with a pinch of salt, because there could always be lots of dirty linen that starts coming out for washing in the public. And if the fundamentals are even slightly askance or slightly, doubtful, I think you just need to book out and exit, and don't wait for actually things to be repaired, which usually doesn't happen. So my sense is there are two strategies here. If the company is fundamentally strong, one is it wouldn't really have these kind of issues. But if it has grown too fast in terms of its price action, and something like this happens, the damage is going to be even more severe. And we've seen that in the past with some of these cases. So I would stay away from, advise people staying away from these companies. And if you have, let's say, investment and they've done well, just book out and look for something better.
Okay.